Hey, everybody. We hope that you and your family are doing well as we head into the end of the year with some changes on the horizon. We've been recently getting a lot of questions about how to protect assets in retirement. So, Carl and I wanted to reach out and share some information about our own personal experiences with how to do this and how we recently solved some clients' concerns in this area and how you can leverage what we've learned to help you navigate this vitally important area of retirement. So, let's go ahead and dive right in. When planning for retirement, we believe it's important to keep all three phases of retirement in mind. And generally speaking, there are three phases that everybody really goes through. There's the go go phase, which is the year that we all look forward to, or the years that we all look forward to. And this is where you're doing all those things on your bucket list, where you're traveling, spending time with family, hunting, fishing, maybe go buy a boat, going on cruises. I guess before this pandemic hit, people were going on cruises, but maybe you jump in the Winnebago and go to the beach or whatever you're doing. These are the fun years, what they call the golden years, right? And these are the years that we plan for and we look forward to. The next stage is the slow go years. After you've done all the fun stuff, you have the t-shirts, the coffee cups, and you've crossed all that stuff off your bucket list, then you may want to slow down a little bit and just enjoy life with family, stay home, do gardening, watch football, or spend time with the grandkids. And the
Spoil them.
last, go ahead, Carl.
Just spoil the grandkids and send them home so you can get even with your kids.
That's right. And then the final phase of retirement is the no-go phase. And unfortunately, we see some people that don't plan for this phase. And we find that most people plan for the go-go years and the slow-go years, but very few people do plan for the no-go years. And I think the reason is probably because you generally don't see commercials with retirees hanging out in nursing homes or assisted living facilities. They generally show people sailing, playing golf, tennis, on a cruise, playing shuffleboard. And so I guess the question is, why don't we plan for this? And a lot of times I think it's because we either don't want to think about it or we don't think it will happen to us. But however, the reality is 100% of us are going to get older, and 72% of those over age 65 will need some type of long-term care at some point in the future. And so, Carl, why don't you share a little bit about your personal experience and your story of how this impacted you and your family?
Okay, this is my mom right after she got married, and you can kind of see in her eyes, she's looking forward to the future. I think all of us do when we're younger. We're looking forward to having a family, a career, and all the things that we want to accomplish in life. And nobody at that time are thinking about those years after we retire and no longer can do the things that we really expect. So this was the time in life where, all of us can remember back when we first got started. This is my mom then. And then when she retired, it was a time for her where she had saved her money, and my mom and dad had saved their money, and she started enjoying retirement. And this is when her and her church family would take off and go. I can remember they'd go to Vegas for 4 days and see 3 or 4 shows every day and then come back. She was very active in her church. She would go to Branson and different places, and that was her go-go years, and she enjoyed them to the fullest. But part of the things that I'm sure she didn't look forward to at the time were the no-go years. And the next picture is when my mom was in the nursing home, and this is probably 6 months before she went home with the Lord. At this stage, she no longer recognized myself or my brother or our wives or our grandkids. Her sister, older sister, also had Alzheimer's. Her mother had Alzheimer's, and her little sister has Alzheimer's. So it tends to run in the family. And with the medical advances we have now, people are living longer. And although she probably never saw herself in a nursing home like this, Years before, we had put some long-term care in place, and it was immensely helpful when the time came for Mom to go into one of these nursing homes. It was something that my brother and I fought against and tried to, take care of her ourselves, but eventually we came to realize that was not something that was going to be possible for us to do.
Yeah, and I had I've had some experience with this personally. I've had the last three people in my family that have passed away. My uncle, my grandfather, and my grandmother all have had some form of Alzheimer's or dementia. And the worst case scenario was my uncle ended up getting dementia, and because he had lost his memory, he actually ended up in a homeless shelter, and we ended up finding him in a homeless shelter and getting him into a nursing home, and so eventually we got him into a better situation, but that ended up being sort of a worst case scenario. And then my grandfather was in World War II, and he ended up having dementia in his 60s, and he was in a nursing home for quite a long time. And then my grandmother, who recently passed away, she had early onset of dementia, and so it was nice to be able to have people there that were able to care for them and take care of them, so that I could go and I could spend time with them. When I went up to visit my grandmother last year, right before she passed away, I got to spend some good quality time with her, and it was nice to have the nurses that came in and took care of her. And so having a plan in place was nice, and so it just helped out with that scenario. So, but the reality is that it does happen, and so we should have a plan for it. And so a lot of times when we're doing this type of planning, people ask us, what does it cost for something like this? And so let's look at, just real briefly, the three different phases that people will go through. The first phase is home health care. This is generally where you're still healthy, but maybe you need some help with cooking and cleaning, some things of that nature. And these costs are based on, I think, Mississippi, Tennessee, Alabama, mostly the southern states, because that's where most of our clients are. And so home health care can start around $32.85 a month. This is an average cost of those states. Assisted living facility starts around $3,500, and nursing home around $59.20. And so home health care, again, where we're talking about is just assistance with little things. Assisted living facility, maybe you get to a point where physically you have some limitations, or cognitively you have some limitations. And nursing home would be sort of the last stage of life. That's at no-go years, and that's where you really need help with that. So Karl, what were some of the costs that you guys incurred for your mom and family?
Well, we were blessed at first because my brother had retired from the sheriff's department. So during the assisted living phase, we had sold Mom's home, and she had moved in with my brother and would split time with me while I was still working. She'd come stay with me over the weekends, and my brother would care for her. But it became apparent when she took all of her medication before the 15th of the month and still had the rest of the month, and she had already taken it. We realized that she needed to go in a nursing home. And as I've mentioned before, we had bought some long-term care insurance for her probably 10 or 12 years prior to her needing it. But that $5,900 a month is really, really close. The long-term care insurance covered $5,000 of it. So we came out of pocket for a little over $900 a month. But it was something that she absolutely needed to have someone be there to, in a nursing capacity, to be with her on an ongoing basis. And she was in the nursing home for right at 2 years. More than likely, she should have been in a nursing home care probably for 3 a year before we put her in there. And that sounds bad, put her in there, but it was something that was needed to have that ongoing care. And as you can see here, men about 2.2 years. My dad was in nursing home for 2 years, had dementia and Parkinson. My mom was in there for 2 years. She should have probably been in there for 3. But the costs are they're going to be there, and if you don't plan for them, they can be detrimental to your overall portfolio and or your family if you're expecting them to help you.
Yeah, and one of the things that we've seen recently is people living longer. We've had some clients that have been in there. I think we had one that was maybe 16 years. And there's scenarios where some of the longer claims we've seen out there, people are in there 20 years because their body is still physically capable of functioning, but their mind is gone, and so they end up staying in a nursing home quite a bit longer. So when you look at the cost over a 20-year period, that can add up pretty quickly. Now this number up here, this $203,000 is a high number. I don't think it would be that much in the southern states where most of our clients are. So this is a national average, but even if you cut that in half and you said that by 4 years, well, that's $400,000. And of course, by 20 years, it'd be $2 million. So it can end up getting expensive, if you end up staying a long time. So there's really 4 different ways that you can pay for this type of care. And the first one is you can use your money, which is you can use money from your investments, you can use money from your savings account, checking account, CDs, whatever that is. We found that we looked at some studies and we said that the average person that enters a nursing home, they enter around age 79. So that's just something to keep in mind, as to, what age you should maybe start looking at potentially having that particular type of cost. So there's your money, which you can do, which can be the most expensive way to do it, because, if you end up using your money to pay for it, $100,000 a year times 4 years. And then if you think about inflation, because we're not talking about, using it necessarily today, we may be talking about 10, 15, 20 years down the road. What would $100,000 in today's dollars look like if we had, average inflation on healthcare is probably around 5.5%. And so, that's where in 20 years from now, the cost could be significantly more. So
yeah, just think about what a gallon of milk cost you 20 years ago and what it costs today.
Yeah. So, I mean, it could be, you got to think about this in terms of future dollars, not today's dollars, because more than likely most people won't be using this until later on down the road, hopefully not using it. But self-insuring is an option, and it's something to consider. The second thing that you want to consider is if you are using your own money and you have a long claim, will your money last long enough? Will you have enough money to be able to endure a 15-year or 20-year or a 14-year claim? Again, at $100,000 in the future dollars, 14 years, that's $1.4 million. Do you have enough money in your plan to be able to do that? So just something to consider when you're thinking about doing that. So the next way to pay for it is have family help out. So Karl, tell us a little bit about how your family helped out and maybe some of the costs that you guys incurred doing that.
Well, Mom and Dad had done a very good job of saving over the years. So in their trust, they had enough money to make up the amount that insurance didn't cover. But had she not had long-term care and had my dad not been a World War II vet, he was in the VA nursing home, it would have honestly decimated the amount of money that they had saved up over the time. So it could have been absolutely, like I said, detrimental to the portfolio that they had spent a lifetime accumulating. So having the long-term care insurance was a blessing for us.
There been some studies. This was a study done recently, and it talked about the cost that it actually costs a son or a daughter to help out. And I really I think I saw this when I went to see my grandmother. My cousin is a nurse, and I know she had to take off a lot of time off work. And the reason why I think that this number is higher for daughters and sons is because I saw my cousin Kelly, who's a nurse. She was taking care of my grandmother. She just, I don't know what it was. I mean, I guess because she's a nurse, but and she was closer to her. She was able to help out, but the cost associated with helping out, there is a cost, because let's say you take time off work. I mean, I've seen, sons or daughters take off time and, quit their jobs and go and take a couple of years off and help out with their parents. And here's the thing that I always think about is, if you're a parent and you have a son or a daughter and you say, okay, well, my son or daughter I know would help me. Most sons or daughters would be more than willing to help out. I mean, I just about think, not everyone, son or daughter, would be willing to, but I think most sons or daughters are willing to help out. The question is, are they capable of doing it, and do you want them to do it? And so, in my case, when I found out my grandmother was sick, I had to make a choice. I know my boys were playing football or some sport during that time. And for me, it was no question. I dropped everything I was doing and I said, I'm going to be there. I flew to Canada and I went to be there with her. And so there was no question, but there is that dilemma of a son or a daughter or whoever is in your family. They have other stuff going on in their life. And so do you want them to miss out on those things? And I think most parents don't. I know I wouldn't want my kids to have to miss out on something with their kids if it was, due to me. If I could have somebody else there to help me, then I definitely would like to have that type of plan. So it does end up, there is a cost when you think about when you're using family. So what were some of the costs that you guys had, Karl?
Well, we were blessed in the fact that my brother had retired, so he was at home at the time. Now he's back working again, but I would have to say the mental cost on him, because we were not familiar with the signs of Alzheimer's and dementia, and it just got to the point that mentally it was dragging my brother down big time, because she would not allow him to get out of her sight, because it would put her into a very stressful situation. If he went out to mow, she would go out there and sit and watch him mow. If he went out to clean the pool, she was out there to watch him clean the pool. Everywhere he went, she followed him around. And the fact that he noticed one month that she had taken all of her medication before the 15th of the month, and she still had the rest of the month to go. We started realizing that there was no way to keep up with it. And the mental drag on him was apparent even for me to see. And I only had her on weekends, and to take care of someone who can walk in the room and forget where they're at, it gets very, very stressful. So it's not just the financial aspect of it. Taking care of someone that has those type of issues can be very, very detrimental to your own mental health.
Yeah, I was reading a Stanford University that talked about 40% of family caregivers for Alzheimer's patients whose responsibility lasted 10 to 15 years, they actually died from stress-related disorders before the person in their care did, which is crazy to me because, and I know that if you've ever had a spouse or a child or somebody that's sick, that it is exhausting to take care of somebody else. And so, it's, again, I'm always willing to do it, but it's just, it has an emotional and a physical toll on the caregiver. So, it's definitely something to think about. The other way that a lot of times people think that they can pay for this is through Medicare or Medicaid. There are programs available through the government that can be accessed, but it's important to know that Medicare does not pay for long-term care in the long run. There is some care for the first 20 days, and then for days 21 through 100, there's a little bit of copay there, but at the end of 100 days, Medicare does not pay. And then Medicaid is the other option, but in Medicaid scenario, you have to give away, or you have to be in a scenario where you don't have a certain amount of assets. And so a lot of times people think, well, I could just go on Medicaid, Medicaid will pay for it. That's potentially an option, but some of the Medicaid facilities that people would go into, depending on the area that you live in, may not be the quality of life and the dignity that you want to spend your last years in. And there's also, a lot of rules around Medicaid, and Medicaid's not easy to get. It's not easy to qualify for, because again, you have to have a very low number of assets, and
yeah, you got to be broke.
Right. And so a lot of times people don't want to do that. And there's even a 5-year look back rule on giving your assets away. So there are some limitations with Medicaid. And really the biggest thing is you lose control of where you want to spend your last golden years. So the other option is you can transfer this risk to an insurance company. And we've seen that there's really two ways to transfer the risk. There's the old way and the new way. The old way of doing this is traditional insurance, pay as you go, typically no return of premium. The premiums are usually affordable. There are some tax deduction or some benefits there. But one of the biggest things that we've seen with the old way is that people were concerned about was that the premiums can increase, and they have increased. We've had some people that have had policies that in some states, the premium has increased 90%. And so that is concerning for a lot of people. So what the insurance companies did is they came out with a new way of doing it where the premiums are guaranteed not to increase. And one of the other things that people were concerned about with the old way of doing the covering this, or the old plans, is that if you pay all this money into the plan, you don't get anything back, right? Unless you use it. And so sometimes people are worried about if they don't use it, they lose it. Whereas the new plans, these what they call hybrid plans, they actually give you some money back if you don't use it. And they still have the tax benefits, but the premium is guaranteed, and you have access to cash in that plan as well if you need it. So those are kind of the two general ways that people can transfer the risk to an insurance company. And if people are interested, we can help people navigate that. So any closing thoughts, Karl, on what we've talked about today?
It doesn't cost anything to give Dave or I a call and take a look at your personal situation and look at the viability of these new products that are being offered, and see if it is something that you're interested in, if it would be something that would help you and or your family, and to just take a good close look at what's available out there. That'd be my recommendation.
Yeah. So the next step is basically so the process that we go through is when we sit down with somebody is we will evaluate your current situation, see where you're at. What we do, we always recommend that you get with your family, you sit down and you say, okay, hey, look, I'm doing some planning for retirement. I just want to give you guys an update on what I'm doing. So that's step one is getting with your family and saying, okay, here are my plans. And then step two is saying, okay, here's where I am. We evaluate the situation. And then step three is we look at potential solutions for any gaps or any things that need to be updated in your plan. And then you can review all the options, compare what you're currently doing with everything that we can design and strategies we can come up with. And then you can just at the end of the day know that you'll have peace of mind that you can live happily ever after in retirement, right? So thank you for joining us today. We appreciate it. We'd love to connect. You can go to www.soundfsg.com and schedule an appointment there. Or, of course, you can call the office. Our office number is 601-856-3825, or you can shoot your advisor an email and we will schedule some time. We hope that everybody is staying safe and we look forward to catching up. Have a blessed day.
Wear your mask.